Let me know if you can hear me. Hello, hello. KJ, you can hear me? Nice. Tells Gamma, what advice can I give a today graduate? Make sure you practice what you've learned. Carl, I have been invited for an accountant interview. What questions should I expect? Familiarize yourself with the adjustments that are required at the period end adjustment, bank reconciliations, preparations of budget forecast. Yeah, basically a touch of what is done every period end. Let's say when you're looking at the financials at the end of a certain period, what do you do? Payroll as well. Yeah, payroll. Because most days there's the use of the accounting software, so also check the accounting software that institution is using. And then what you require to understand as well is the doing the bank reconciliations, preparing the document. You should familiarize yourself with the Microsoft, or whether they're using Microsoft, the Word, Excel, spreadsheets like that, okay? And then Cartel Gamer, what advice can you give a TD graduate has mentioned? Make sure what you've learned, try to practice it, have a portfolio of what you can do. Have a portfolio of what you can do. Visibility is key. Visibility is key. Cartel's Gamer. For the people joining on YouTube, we are starting exactly. Let me know if you can hear me first. Kindly chat on. Kindly chat, you can hear me. Mishuko, let me know if you can hear me. Let me know the ones who have already joined. Hello, hello. Just chat there. We will start in the next 5 minutes. Today we are looking at correction of errors in suspense account. Yes, KJ, I'm live on YouTube. KJ, I'm live on YouTube. KJ, I'm live on YouTube. Thank you, Kelvin. And Rockman, I'm live on YouTube. There's a link on my TikTok stories. You can join the live sessions. We're going to be looking today at the suspense account and correction of errors. I'm now going to study, please. Rockman, you can join the stream on YouTube. We are about to start the session. What else? Yes, I am. Just a second. I'm called the welcome. Almost any job vacancy for accountant advanced level CPA with 2 years of experience. In case something comes up, let me know. Reno, apologies. Actually, I think I put it on one story on Facebook, but we are here. I'm going to look to ensure that you have these the allowance on YouTube as well. The videos that I'm going to have the pre-recorded videos on YouTube, okay? Then we have, let me know for the people who are joining on YouTube, just chatting there. Welcome, Brenda. Welcome, Mishuko. Let me know who else is already. I can see there are more viewers just chatting there. We are going to start in a few minutes. So, almost if anything comes in, tell you. Then we have year 2 in university. What you do encourage me to do better. Continue studying, learn the skills, learn, also move with the technology, learn what is happening, learn to incorporate the tools that are coming up. So in the current world, you look at, hi Jackie, welcome. In the current era, we look at the tools that are there that are going to assist us. It's not like we moved from doing the accounting on paper, now we are using accounting softwares, but at the same time as you have that accounting principle, it's very key to understand it on paper, but also incorporate the aspect of the tools, which is easier when you understand the principles, or you understand the concept of what is happening behind those accounting softwares. Now, I'm Carl, yes, I'm Kenyan. For the people on YouTube, keep liking the live as well so that others get to join. Jackie, Rhino, Meshuko. We're about to start in the next, let's start at 8:05 exactly. Here, I'm Carl. Yes, I am a Kenyan. Tokoto Sikostan. I hope I know how to pronounce that. Just trying. What are you going to be doing? Again today. We are looking at the suspense accounts, suspense account and correction of errors. You can join the live stream from the link on the TikTok story. Go subscribe to the account so every time I start streaming on YouTube, you're notified. Every time I start streaming on YouTube, you will be notified. Every time I start streaming from YouTube, you'll be notified. So go follow Accounting and Finance on YouTube. We are streaming now. Kendi Kenya, hi, how are you? How are you? Thank you, Kelvin. This is the topic of today. Let me pin this comment. Thank you. Kumar, I have diploma in accounting, but could you advise me to do better to prepare for accounting job? Having gotten the concept of accounting, then please also get time to learn the tools that are being used now, the ones that you can incorporate. Also learn how to use Excel. Basically work on your skills, and if possible, whenever you come up with a project, make it visible on the platforms that are there. Okay, so work on your skills, the technology bit, incorporate it, and also make sure you continue to enlarge your concept of understanding of these. Keep up with the updates on IFRS or GAAP or whichever applies to your location. Follow the trend, know what is happening, what is changing, especially when it comes to the taxation world, to IFRS and GAAP changes. Okay. Our next question is Katel Gyamam want to apply for a job in FMCG company. What do you mean by FMCG? What do you mean? Is it a manufacturing or what? Not so good with company. Oh, okay. Fast moving consumer goods. Oh, okay. Yeah, fast moving consumer goods. Basically, it depends. The stuff that you should learn first, it depends with the capacity, or rather how the institution, is it a big one, is it a small one? If so, then learn when you're learning this, learn from the one that is this for small ones all the way to up. It doesn't hurt to know more. Okay. Hello, how are you? The Style Tribe. I am well. I hope you are well. Cartel Gamer, I hope I've answered your question. Sammy Samuels, good evening. I've been doing bachelor's in business administration, specializing in accounting. Good, you're in the right place. The Style Tribe, I have exams in November, but I don't know anything. What are you? Which exams are you going to sit for in November? Let us know. Study. Yeah, that is true. Study. What advice did you give me to secure my career path? Please make sure you study. So I'm getting out of TikTok, so I want to start the live stream on YouTube. Reno, can you hear me? Now I want to start the class. The people on YouTube are moving to YouTube. I'm sorry, on TikTok, I'm moving to YouTube. Meshuka can see saying time is a matter here. True. Okay, then. For the people on TikTok, there's a link on my TikTok story. We are starting the session on YouTube stream. Okay. So today, as mentioned, we are looking at the errors, correction of errors, and the suspense account. Okay. So every time when we get to the we get to prepare the trial balance. When we get to prepare the trial balance, remember the trial balance, it has to tie. That is, we should have the debits. The debits should be equal to the credits. The debits should be equal to the credits. If the debits are not equal to the credits, then that means there is an error. And this, we use the trial balance to detect if there is this error, because remember, in the double entry accounting system, the debits will always be equal to the credits. If they are not, then this is where the suspense account comes in. But then before we can even proceed, there are errors that cannot be detected by the trial balance because these errors do not affect the trial balance totals. So we classify errors into two main, which is errors which do affect the trial balance totals and errors which do not affect the trial balance total, okay? So first recall that the trial balance has to balance. If it does not balance, that tells you there is an issue, okay? I can see my screen is loading. Let me know you can hear me well on the chat. Then the first thing we are going to look at first is errors which do not affect the TB totals, because the errors that affect the trial balance totals are quite a few, but the ones that you cannot detect on the TB total are more, because most times you're going to find the debits are equal to the credits, but there is an error. There is an error. Let us look at this error so that we are able to know, okay? So first, the first error is error of omission. Error of omission. When you omit something, you're definitely not going to have a debit or a credit, okay? There won't be any debit and there won't be any credit, so there won't be any imbalance in the totals. Let me know, Meshiko, if you can hear me. You can see my stream health is getting lower, so that I know if I need to restart this early before it works, so it is hangs. Kindly chat for the ones on YouTube, chat there. Let me know if you can see my screen clearly. Let me know. For the ones on YouTube, we are streaming on, for the ones on TikTok, we're streaming on YouTube. Somebody chat if you can see my screen clearly. No, now it's okay. I think it's now better. So, as I was saying, the first error is omission. If you have omitted something from your record, then it means you never passed any journal entry, so there is no debit and there is no credit, okay? So this error, it's not going to be detected by the trial balance because you don't have any debit, neither can you see any credit, okay? So, for example, we are told here that the motor vehicle was purchased in cash at $90,000 and this was not recorded. So this was basically omitted. Thank you, Jacqueline. Thank you, Akini. Thank you, Moha. Yes, that is great. Now we can proceed. So when you have an error of omission, what do? It means you have not recorded this entirely. What you need to do is you need to go and record it, okay? That's how you correct the error of omission. You can debit. For instance, in this case, we bought a motor vehicle in cash and this was not recorded. So we need to record that we bought a motor vehicle. Okay, so we debit motor vehicle account. Others, it could be PPE account. Okay, and then what do we do to the cash? You need to be able to know the journal entries to pass when you are correcting these errors. Okay, and remember, even before we proceed, you need to remember dealer. Remember dealer. This is the expanded accounting equation. These are accounts, this is dividends, expenses, and assets. Then these are liabilities, equity, and revenue. These, when you want to increase them, you debit. When you want to reduce them, you credit. And these others, when you want to increase them, you credit. And these ones, you debit to reduce them. Remember, for assets account, to increase them, you debit. To decrease them, we credit. That is why in here, the motor vehicle is an asset account and you want to recognize an increase because you bought the motor vehicle. That is why we are debiting. And because we've paid in cash, our cash has gone down. Our cash account, remember, it is an asset account as well. So, but it has reduced because we've given out this cash to whoever we were buying from, an amount of these 90,000. So basically an error of omission is where we have completely omitted this. You could see this, maybe you start preparing your financial statements and then you're like, wait, we bought a motor vehicle. Why is it not here? It's because you omitted it in the first place and you could not have detected it. So this is where you go back and record or correct this by making sure you include it, okay? Then the second error is error of principal. Error of principal is the transaction recorded in the wrong class of account, okay? So for example, you've been told here that you bought furniture, which is PPE in this case. That is furniture you bought to use in the business, worth of this amount, but you debited purchases. Remember, purchases is what? Is stock. But this furniture is this furniture basically is what you're buying to use in the business. Purchases is your inventory. So you have recorded in the wrong class of account. This is not going to be detected in your trial balance. Why? Because you're going to have the same figure on the asset side, because furniture and inventory are on the asset side. So it's not going to cause any imbalance in your debits and credits. So that is why you need to be keen. And to correct this, remember what happened when you were recording this. You came and debited purchases. You debited purchases account, and then you credited cash account, okay? So that is to reduce it because you gave out $1,000, but you got furniture, which is wrong. So we want to make sure this is furniture. You should have debited furniture and credited cash. So we have the correct recording of the cash account. What is causing the problem is we debited purchases. So to correct this, we basically come and debit furniture. Now to recognize we got the furniture, it is not the purchases, and then we are going to credit purchase now to remove that from the purchase account, okay? So this is how we correct this error, okay? So I can see Meshiko is saying I'm not understanding the proceeding topic. What exactly? Be specific, kindly. Be specific. Remember, we are looking at the suspense account and correction of errors. How do we correct these errors? Okay. And then we first looking at those errors that will not be detected by the TB. That is what I've mentioned, the error of omission first. And then now we are looking at the error of principal, where you have recorded it in the wrong class. You brought in furniture, which is PPE, but you recorded as purchases, okay? So we are going to continue, and you're going to see what we do when we are looking at errors that are being affected that affect the trial balance. Okay, what do we do with the suspense account? So the third error is error of commission. Jacqueline, you're asking, where does a purchase appear when debit? Where does purchase is basically here is basically inventory. This is inventory account. This is inventory account. This is a cash. This is an asset account. This is an asset account, and this is an asset account as well. So what happened is you recorded in the wrong class. Okay. So you have furniture and purchase both assets. So you're not going to see a difference in your TB, and you need to ensure you record this as PPE and this is inventory. Okay. If I'm getting your question correctly, let me know if I've answered your question. Then we have the error of commission. You've recorded the correct amount, but the wrong account. So you received payment from John. For example, you received payment from John, and it is posted as to James. It is posted to James. So it appears it is James who has paid, yet it is John who paid. For this to basically recorrect this, you need to come now and move this payment. Remember, payment was received by John, so you come and debit John's account. This is basically to reverse this, and now you credit James' account. Okay, you come and credit James' account. Jacqueline, let me take you there. Let me explain this. This is, I think your question is still on the error of principle, okay? So for the error of principle, we are saying the furniture. Let us walk it step by step. So you bought furniture, PPU worth this, and debited purchases. So that was the error that you did. So what you came and did, you debited purchases account, which in this case I'm telling you is inventory, the same as inventory account, right? Inventory account. So you debited which amount? An amount of $1,000, right? $1,000. This was the initial mistake you made, and the cash account you credited 1,000, right? So this was the error. You debited purchases instead of debiting furniture. So it shows that you got in inventory, yet it is furniture. Remember, furniture is a non-current asset. This is a current asset. So what was the correct entry that you should have passed? You should have debited inventory, or basically purchase account, the same amount, okay, and credited cash account, okay? So already crediting cash on both, this is the right way. The problem is this one. You are debited purchase instead of inventory, okay? How to go about it? You could decide to come back here and reverse this first. You could say, I'm going to debit cash account and credit purchase entirely. I'm going to debit cash account and credit purchase account. What is this going to do? This is going to reverse this completely, and then you come and pass this new entry to record now the correct thing that happened. But now you can as well take and debit inventory and credit purchase, because the cash bit was recorded correctly, okay? Let me know, Jacqueline, if now you understand. For the people on TikTok, remember, we are streaming on YouTube. There's a link on my TikTok story. Jacqueline, let me know. Let me know if you understand what I've done there. Let me know. The people on TikTok, remember, we are streaming on YouTube. There's a link on my there's a link on my TikTok story. There's a link on my TikTok story. Chepkonye, basically when you're using a T account is when you have many transactions, so you are able to follow. A T account comes in after you pass the journal entry, so then you have many transactions, then you can put them in a T account, okay? Let me say, for example, let me try put this in the T account. Let's say cash account. You see, initially you had the credit. We had the credit here of 1,000, right? When you come and reverse this, you've debited $1,000. So this becomes a balance of 0, right? And then now when you come past this, what are you going to have again? You're going to credit 1,000, which is now correct. Okay, Jacqueline, you're going to understand more. I hope you have an understanding of how we debit and credit. There's quite some videos I've done here. It is very important that you understand when you are debiting, when you are crediting. Actually, I think I should show you that aspect of the dealer before we proceed. Let me actually do this. Let me do this so that you are able to know, because most questions that will be asked under this is they want to test your understanding of recording of journal entries, okay? So we usually have, after the accounting equation we have is called basically assets. The assets is equals to liabilities plus equity. plus equity. So basically, under equity is where we bring about what we call retained earnings, which is basically revenue, our revenue, we less expenses, okay? Less expenses. And from it, that is where we are able to take dividends or drawings if it is sole proprietorship, okay? So usually when we expand this accounting equation, we have the assets follow in through you. This is going to help you a lot when it comes to journal entries, okay? We have the assets is equals to liabilities, and then we have the capital contribution of the shareholder. If it is a public listed entity, we call it shareholders capital, okay? So you can just call shareholder capital or shareholder equity. And then now the other components of equity is we are not expecting to have a retained earnings account. This is a calculation we do at the end, considering the revenue we made and the expenses, so we are able to see the profit, and then we see what we are taking to the next period as retained earnings. But this is coming from the component of revenue and expenses. So we have an addition of revenue here, we less expenses, and from it we are going to take dividends or drawings, okay? So up to that point, this is where now we take, when you take this to this side and this on this side, we have dividends now, dividends or drawings, dividends. Then we have expenses. For the people on TikTok, we are streaming on YouTube. There's a link on my TikTok story. These dividends plus expenses, then plus now assets, okay, will be equal to liabilities plus the stockholder equity or shareholder equity or capital plus revenue, okay? I hope you've understood how I've derived that equation. And from it, know that for this account, the accounts which are dividends account, an expense account, and an asset account. An asset account is those in both current and non-current asset, cash, prepaid expense, trade receivables, what else have we encountered? Inventory. All those are assets. Expenses account is those expenses that have been incurred. All these accounts, when you want to increase them or to show that they have increased, if an expense has, you have incurred an increase, you debit that account. If it is asset, if you've received cash, if you have received inventory, if you have received furniture, PPE, you show by debiting, you debit that account. And when you want to show that you've paid out, cash has gone, or you sold your inventory, or you have sold your you have maybe dividends mostly doesn't reverse and expenses. Asset is what goes out. When an economic resource goes out, that is when we credit to show a decrease. And then on this other side, for liabilities, this is your trade payables. When you want to indicate that your trade payables have gone up, you must ensure in that you are crediting that account. The moment you get a loan from the bank, the actual journal entry you pass, for example, is you debit cash, because now you've been given cash amount. Maybe you got 50,000 from the bank, so this is showing an increase in your cash account. And then you got the loan, you need to record that loan payable. And when you credit this loan payable account, you're not signifying a decrease in that account. No, you're showing an increase, because you are saying, as of this point, we have a loan payable of 50,000. This is still an increase. Even if you see your crediting, many people or many students confuse like a debit is always an increase and a credit is a decrease. No, it depends on the accounts. And in this case, I'm saying for liabilities, equity, and revenue account, when you debit that account, you are actually sorry, you are decreasing. So when you want to increase liabilities, equity, and revenue, you credit, and when you want to decrease, you debit. Okay, you can see these two things are vice versa. For the people on TikTok, remember we are streaming on YouTube. There's a link on my TikTok story. Linda, there's a link on my TikTok story. There's a link on my TikTok story. There's a link on my TikTok story. Join the live there. So up to that point, hope we are together. That is why even when you're looking at revenue, you're going to find revenue is on the credit side. Every time you get revenue, you credit. Okay. So up to that point, I hope we are together. Let me get a comment from the comment section. Just chatting there. Okay, so here to always remember this, use the word dealer. Use the word dealer, D-E-A, which stands for dividends. Okay, E is expenses and A is assets. Okay, then the other dealer, we have liabilities, we have then equity, and we have, R, which is revenue. The word here is dealer. Let me get from the comment section that we are together up to this point. This is the first three. The other, to record debit and credit, that's what you use. Okay, then now we go back to this. Nice to hear, Jacqueline. So we go back to this now. That is what I have explained here for the error of principal. These two are asset account. So what you're basically doing, you are reducing this asset account. So now that you increase this because we didn't buy any inventory, what we bought is furniture. Okay, so let us now look at error of commission. Thank you, Jacqueline. Thank you, Naomi. Then let us look at error of commission. We said error of commission, we have the correct amount, but now the wrong account. You received money from John. Now you received money from John, but now you posted it to James. This is someone who is the debtor. This is basically you sold to credit to John and James, but now you received money from John and posted it to James. So to reverse this, you basically have to debit John's and credit. This is to reverse, to remove it from James, and record it to John's. Okay, and record it to John's. Yes, Maria Kinyi, drawings here. When we have this D could be drawings or dividends. Okay, drawings or dividends. Let me understand what you mean assets as well. Let me understand. Then we have the fourth error, which is compensating errors. Errors that overstate or understate both credits and debits on both accounts. So you won't be able to know. Because your debits will be equal to the credits. Okay, so you can't declare it on the trial balance because the sales is a revenue, right? So when looking here already, under revenue, we are told here this example, you have understated $500. Okay, you have understated $500, and you have also understated $500 on the rent expense. So, and you see expense is here. Okay, so still your debits and credits will be equal at the end of the period, but you need to correct this because it is showing a balance, but there's still an error. Okay, so how do we correct these the sales? Sorry, I hope the it is not lagging again. Okay, so how are we going to correct this? So we have understated the sales by 500. Basically, what we're supposed to do here is we make sure now for the sales, we have now stated it correctly. The sale is below by 500. So basically what we need to do is to increase our sales, you credit revenue, that is sales, by 500. And also now the rent expense, you do what? You debit 500, okay? We debit, remember expense, you debit to increase. So because we had understated, we want to now increase that 500, okay? So rent is expense. To increase it, what do? to increase expense, you debit. And to recognize an increase in revenue, you credit. That is why we are debiting rent expense and we credit sales. Okay, let me know up to that point. You just comment there. And then we have complete reversal of entries, complete reversal of entry error. So we have the correct amount is posted in the correct account, but in the wrong side of the account. Okay, let me just explain with example. To record the purchase of equipment, you debited cash account and credited equipment. How are you supposed to record the purchase of equipment? Let me get this from the comment section. How are we supposed to record purchase of equipment? For the people on TikTok, remember we are streaming on YouTube. We are streaming on YouTube. We are streaming on YouTube. Let me get a comment for the people on YouTube. How are you supposed to record purchase of equipment? Let's say you bought a laptop. Let's say you bought a laptop. Yeah, yes, Meriakinyi, yes, just you have understated, yes. Let me get, okay, thank you, Naomi, debit equipment, and then what is the corresponding entry? You debit equipment and do what? You should debit equipment. Why equipment in this case, the correct is supposed to be debit equipment. Let's first record the correct one is you debit equipment account and credit cash account. Right, that is how you are supposed to do. But what did you initially do? You debited cash account and credited equipment. You see, that is wrong. That is wrong. So what do you do? What do you do? Any guess? Let me get a guess. You want to arrive at these, but you already did this to cash account and equipment. So equipment, you need to have a record. Let's say this amount was 10. The amount of equipment was 10,000. Okay. So we need initially you credited equipment. So you need to increase. You need to reverse it. You need to reverse and have it at least up to the level that it was. So basically, you're going to see you will have to debit equipment. Initially, to reverse it, you have to debit 10,000, and then later you have to record the correct. So you will need to debit 20,000, and then on the cash account as well, you had shown an increase, yet you had bought. So you used cash. Cash went from you, yet you went and debited this 10,000. So for you to reverse that, you have to credit cash account twice. You see, I'm saying the equipment amount cost was 10,000. You paid 10,000. So for you to reverse and correct these, you need to do it twice. Let me know first if we are together there. Let me know if you understand what I've done there. For the people on YouTube, on TikTok, remember we are streaming on YouTube. Nice, Ndegwa. Yes, you have to do it twice. You have to do it twice. The first one is to reverse what you did, which was wrong, and then the second one is to correct, to record the correct entry. Okay. For the people on TikTok, we are streaming on YouTube. There's a link on my TikTok story. We are streaming on YouTube. Okay. Then we have errors of original entry. Errors of original entry, okay? So this is basically you've had the correct account but wrong amount, okay? It's human error, but remember this, so much this is usually in the syllabus of financial accounting. There is minimal of errors when it comes to the technicality of the system, because now we are relying on the accounting softwares in doing this. And when we automate, we reduce such errors. But there could be errors, and as an accountant, you need to know how to correct them, okay? When maybe your system is down, you're going manual, then you need to be able to know how to correct these errors. So errors of original entry, so you have the correct account but wrong amount. So inventory worth 10,000 was recorded as $100,000, okay? $100,000. It is worth $10,000. This is normal. You could do this in your system, even when you're using that accounting software, but you need to know what to do then to correct it. So what you did when you record this, you got inventory, right? You got inventory. You, instead of recording 10,000, you recorded 100,000. And because you bought in cash, you credited cash account an amount of 100. But what was the correct amount involved? The correct amount was 10,000. So what you do here, you get the difference. And the difference is basically 100,000, okay, less 10,000, which is going to give us 90,000. So we want to have the effect of 90,000, okay? So what do? We want to take our inventory from 100,000 to what? Remember, inventory and cash are asset account. We want to reduce inventory account to 10,000. What do? We credit inventory account an amount of 90,000. That is going to reduce it from this 100,000 to 10,000 because now we've credited 90,000. What about cash account? We credited cash account of 100,000, yet we only paid 10,000. So how do we take it from 100,000 to 10,000? We debit cash account an amount of 90,000 because this is going to increase the cash account by 90,000 because we only used 10,000, yet we credited 100,000. Let me know if you understand that example. That is for errors of origin. Good. Ndegwa. Correct. That is correct. For the people on TikTok, thank you, Zandilin. Thank you. Baby Love Hearts, we are streaming on YouTube for you to be able to see what you are writing. Please join on YouTube. Please join on YouTube. Dila, yes. Kindly join on YouTube. The link to the YouTube account is on my TikTok story. Go subscribe so every time I start streaming, you're not left behind. You are not left behind. Okay, so for the people on TikTok, keep bringing in the questions. Okay, those are basically the errors that you're not going to see. You're not going to dictate them when you have the trial balance, okay? Because the debits will be equal to the credits, but you will have to check when you need to, how you need to do this, okay? You'll have to check and see where the error is coming from. I see Moha, you're asking, when using accounting softwares, how is it if I just edit and change it to 10K instead of 100K? There's a way you're going to see each softwares are different, but they have some similarities, definitely. You're going to see when you pass a journal, there's approvals in place. So when you're correcting a journal entry, it has to go through an approval and it has to have an explanation of why we are doing so. Why are we doing this? You can't just even when you're using an accounting software, by the way, as an accountant, just know there's limits to what you can do because you can prepare the journal entry, you can pass it, then it has to go through some approval, okay? Yes, it has to go through some approval. It has to go through some approval and you have to explain why you're reversing this, why you're passing this. Even the period end adjustments, they have to go through approval, especially those, because they have to be accompanied by the necessary calculations that you have done so that you pass this journal entry. Let me know if I've answered your question. Definitely with that, what you will have done by correcting, let's say, when using accounting softwares, I don't think so. Most softwares allow for just an edit, and I don't think so. Okay. But some, if they allow for it, remember again, technology is coming and there are many ways we can use it to correct this, but mostly require supporting documentation to pass even a reversal. It requires supporting documentation to pass a reversal, okay? For the ones that have interacted it, so the ones that have interacted with you require it, okay? Then Amon, can you call it understated? Understated, what do you mean? Which one is which are you talking about? Let me know specifically. I know maybe you might be behind on the live session. So I want us now to look at the errors that affect the trial balance total. Basically, when you post to only one side, and these are rare now that we are using the accounting softwares. These are rare now that we are using the accounting software, because the accounting software won't allow you to only pass a debit and not have a credit. They have been made in such a way you can debit and credit, okay? You can debit and credit every time you have that set. So it is rare to have this when you're using an accounting software that is automated. There is manual passing of journal entries, but still also these softwares are enhanced in such a way we have a debit and credit. But before, if you're not using an accounting software, then you see this is an error that you could experience, where you debited an account and you forgot to credit the other account, or vice versa. You credited an account and you forgot to debit an account. Taking you back, Hamon, you're saying the error number 6. The error number 6, you are saying it was no, the error number 6, you can't say it was understated, because inventory was 10 and you recorded 100, so it means you overstated. The correct inventory was supposed to be $10,000, you recorded 100,000. So that means you overstated it. So you are trying to bring it to 10,000. So that is why you are using an effect of 90,000 to take it back to 10,000, okay? So let me know if that's clear. We have unequal posting as well. It's another issue where you paid rent of 1,500, but you, on the rent expense, you debited 1,500, but you credited 1,050. Human error. This will also it's going to make the debits will not be equal to the credits. The debits will not be equal to the credits, okay? So this also unequal posting can be detected by the trial balance, okay? And now what happens? And that brings us to the suspense account. For the people on TikTok, remember we are streaming on YouTube. Hamon, let me know if we are together. Okay, so for the suspense account now, this suspense account is a temporary account, note that, and it records the difference between the debit and the credit total of a trial balance until the errors causing the imbalance are what? Are identified and corrected, okay? So basically, nice, Amon, thank you. So if the debits are not equal to the credits, then that total, you take it, you pass it, you record it in the suspense account, okay? So that now you are you go and now investigate what is causing this difference, okay? And remember, this is a temporary account. It is a temporary account. You have to check what is happening and correct it. Let me give you an example here of the trial balance that we have. The balances are 50,000, okay? The debits and the credits are 48,000, okay? So for each to balance, we are lacking 2,000, which we pass in the suspense account. You can't say a suspense account is a debit or a credit account like the way I've explained for dealer. No, a suspense account, we only take the required, the one that is the one that will fill the balance. For example, here we see we have 50,000 and we have 48,000 on the credits, and it should be equal. We should be having 50,000 is equals to 50,000, right? So this 2,000, we are going to record it on our credit side. So we are going to have here 2,000. That is the difference between 50,000 and 48,000 on the credit side, okay? When we have it as this, Okay, this is another trial balance example. We have here 34 and we have 38. You see, we have a deficit of 4,000 on the debit side. Then we are going to record it here on the suspense account as 4,000. Okay, let me get the questions as we proceed. Let me know the questions. For the people on TikTok, remember we are streaming on YouTube. You will miss out. So kindly go to the YouTube account, subscribe and join the live sessions. And for the people who are streaming on YouTube, remember to subscribe on so that when I start streaming, you're notified. So that I start streaming, you are notified. Kindly drop any questions you have before we proceed. Before we proceed, drop the questions you have. Drop the questions you might have up to this point. Drop the questions you have up to this point. Any questions, any comment? Any questions, any comment? I want to check a question here that was one of those questions that was done past papers for the CPAs on this topic. Let me get the questions. And if you always have a question that you want us to tackle on this live, you can feel free to share. Feel free to share. Yes, accounting. Do we also have a suspense account? Mostly, I would, to be honest, I don't think so. There's a capacity for the suspense account because if you have the rules already in the system that there should be a debit and credit and they should be equal, then there won't be much of errors that we are expecting to see. Okay, that we are expecting to see. So they already, it has been automated that the debits and the credits has to be equal for that journal entry to be passed at that particular point. So this curbs that. Okay, Linda Kibet, CPA paper 2025 December. Let me check. I think I have that paper. We can do that one. We can do that. Let me know if it is this. I want to add it here. You tell me if it's that. We can look at that question. If you have further questions, just feel free to drop them there. We are looking at question 1 on Eskimo Enterprises. Just confirm, is that the question you're talking about? Let me know if that's the question. Let me put it here. Yes. And yes, what are your prediction on this topic for the coming exams on Monday? Yeah, there could be a question here. Expecting definitely you will have the statement of financial position, statement of profit or loss. There should be bank reconciliation. One maybe suspense, maybe. If not, then statement of cash flows. Statement of cash flow. Then what is the other? I'll tell you once as we finalize on these. As we finalize on these. Okay, let me know if this is the question. Let me know if this is the question. We go through it step by step. And if yes, what are your, okay. And then, and if yes, if the software there must always have it, we can only do, no, they always, there's been automated that there is a debit and a credit and it has to be equal for that journal entry to go through, okay? It has to be automated for that, whatever to go through, for the journal entry to go through. So let us look at this question. Let us look at this question step by step together. So we will start. We are told here the trial balance of Skimo Enterprises as at 31st December 2025 failed to agree and the difference was entered. Let me know you can see the screen well. I think that should be better. That should be better. Yes. Yes. So failed to agree and the differences was entered in the suspense account. The following errors were subsequently discovered, okay? So we are told a purchase daybook total of these had been posted to the ledger as 3.2 million. So this is basically an overstatement. This is already an overstatement. Then we have the sales account had been understated by 2.4 million. The sales account had been overstated by 2.4 million. So this is an overstatement. And then we have discount received amounting to 140. This is income had been debited to the discount allowed. So it is showing discount allowed is an expense and it is income in this case, okay? Then we have accrued salaries and wages amounting to 120,000 had been completely omitted from the books, okay? So we didn't have the accrued and wages amounting to 120. They were omitted from the book. So in this case, we need to record this. This is an example of the error of omission, okay? Then we have loose tools bought for 80 had been debited to the parties. This is an error of, remember, this is the error of the one where we omit, let me show you. Actually, this is the error of principle, okay? Then we have purchases of inventories as that 1.4 million had not been posted to the ledger, but had been correctly recorded in the cash book. So we have purchases of this inventory is not in the ledger, but correctly recorded in the cash book, meaning there was a credit in the cash book, but no debit of purchase of inventory. Then we have bad debts amounting to 190 shillings written off from the trade receivables account and not been posted to the bad debts written off account. That is the expense side of these, to recognize the expense. Then we have the proprietor of Eskimo Enterprise had withdrawn a goods worth of this for personal use, no entries. So we need to have a recording for drawings here. We had to have a recording of drawings here. So this is omission as well. So journal entries to correct above included appropriate narrations and suspense account duly balanced showing the initial difference in the books, okay? So let us start by having we tackle the first, which is the journal entries. It is the journal entries. The journal entries here. Journal entries, okay, that we need to pass, okay? So we have, we'll go one by one, okay? Journal entries. So the first transaction. And always when you're doing this on your exams, for exam purposes, everywhere, even when you're applying at work, remember you need to have your work as neat as possible. You get to get more. You get to get more marks from just being neat. You could make errors just like anyone would, but at least be as neat as possible, okay? So the first transaction, we were told that Just a second, trying to multitask. We are told that a purchase day book of 1.6 million had been posted to the ledger as shillings 3.2 million. Okay, so we already have the difference was entered in the suspense account, which was basically these you already have, because for example these are purchase day total of these had been posted to the ledger. We already have this difference in the suspense account. Okay, so here for the first we are going to have a debit. Okay, we are going to have a debit in the suspense account. In the suspense account, what I have said there is already the difference was entered in the suspense account. Okay, that is what they are saying, the difference between the total debits and the total credits. And then we are told here a purchase day book total of 1.6 million had been posted to the ledger as 3.2 million. So we need to reduce that. So we are going to debit suspense account an amount of this 1.6 million, and we are going now to credit this purchase account. Okay, we are going to credit purchase account an amount of 1.6. Basically I have taken 3.2 million and less 1.6. It's going to be actually 1.6, right? 1.6. So that is why we want to reduce this. We want to reduce this 1.6. We want to reduce this 1.6 million. Okay, so that is the first transaction. Now let us look at the second. Transaction. Let us look at the second transaction. Kindly feel free to ask a question as we proceed. So we are told in the second transaction that the sales account had been understated by 2.4 million. So meaning we need to have a credit in the sales account of 2.4 million to make sure we are in the correct stating of these sales account of the sales amount. Okay, so here we are going to debit suspense account again, suspense account an amount of 2.4 million, and then we increase our sales account. So we are going to credit sales account an amount of 2.4 million. Okay, and I saw it is written that you should have the narration. So what I'm saying, basically you should be able to write. So we are basically trying to correct the sales account by increasing that understatement of 2.4 million. Okay, so don't forget to narrate your thought process. Basically narrate your thought process as it is. Okay, then we have discount received amounted to shillings 140 and had been debited to discount allowed. Nice. This one is interesting. So we have that. So this is already, you have that. Just a second, that transaction, you have recorded the discount received on the discount allowed. Okay, so basically you have to make sure you take when you're recording, let me explain this. When you're recording discount received, you credit to recognize an increase. So discount received is what? Discount received is income. What about discount allowed? Discount allowed is an expense. What do you do to record it? You increase it. You debit to increase it. So what do you do? To correct this? You are going to actually debit suspense account. What is the amount here? We are going to do it double, okay, because we have an increase of 2. But let me explain first the credit bit, where we need to record the correct discount, and to record discount received, which is income. What do you do to increase it? You credit an amount of, what was the amount in this case? Our amount was 140,000, okay, 140,000. And for you now to reduce the discount allowed, which is an expense. So if it is an expense, meaning you had debited to record an increase, but now we want to reduce it because it is not there. So you credit. When you credit discount is allowed, you are reducing it. You are reducing it an amount of 140,000. So crediting discount received, you have increased it. Remember, this is a revenue account rather than income. Remember the word dealer. And then to credit discount received, you have actually reduce that discount allowed. Remember, the debits are equal to the credits to help you know, should always equal to the debits, and the credit should always be equal. So this one is going to guide you to know you're supposed to make sure you debit now to 80,000, okay? To 80,000. Unable to multitask. For the people on TikTok, please join the live session on YouTube. Join the live sessions on YouTube. Join the live session on YouTube kindly. So let us look at that. I hope you're together there. Let me get your questions on the chat as you proceed, please. Then we have accrued salaries and wages amounting to 120,000 had been completely omitted from the books. For the error of omission, what do? You record it. This error of omission does not affect, it's not going to affect your balances, okay? So I'm not expecting to see here this transaction affecting your suspense account, okay? It's not going to affect your suspense account. So here we want to record this. So basically we are saying accrued salaries and wages. So this is a liability, had been completely omitted from the books. So you need to make sure to record a liability. What do? You credit. To record a liability, you credit. Okay, so you need to recognize the expense and record the liability. So in this case, we have the debit salaries and wages. This is an expense account. Remember, an expense account, always have dealer in mind. This is going to assist you in many ways, okay? This is expense account. To recognize an increase, you debit, okay? On this side, what do? You debit to reduce, and you credit to increase, okay? So debiting salaries and wages, remember this is an expense account. Okay, you need to recognize that expense. Remember, an accrued expense has been incurred. It's just that it has not yet been paid. That is why we are going to credit, because here we are recognizing an increase in our liabilities. Your employees have worked, but they have not been paid. So this is a liability. So accrued salaries and wages. What is the amount? The amount is 120. So this one, remember, should not affect the suspense account. Error of omission, okay? Then we continue. We are told, let me know if there's any questions. Let me know. Okay, let us proceed. So we are told again, we are told that loose tools bought for shillings 80,000 had been debited to the purchases account. So loose tools, this is what is a loose tool in this case? A loose tool is kindly people on TikTok, remember we are streaming on YouTube. There's a link on my TikTok story, okay? So loose tools are bought on at 80,000. What are loose tools? Loose tools is basically PPE. But now you went and did what? You debited purchases account. So this is in the right class. And remember, this is not something that you're going to see. It's not going to affect the suspense account. Remember why? Because these two, loose tools is PPE and purchase is also PPE, is also an asset. This is an asset account and this is an asset account. So this debit is in the correct class. So the debits and the debits and the credits are not going to be affected. They are going to be okay. So what you need to do is now you need to come and correct. This is the fifth transaction, right? The fifth transaction we have, you need to come. Now you had loose tools, you had debited purchase. So what you need to do is now debit loose tools. You're just moving money in the asset class, okay? Loose tools, 80,000. Remember to write this clearly. And then what are you going to do? You're going to credit purchases. You're going to credit purchases account, an amount of 80,000. You know what is happening here? It's basically under your assets account, under your assets here, under your assets here, what is happening is you are changing the increase, okay, in the purchase. You are reducing it, okay, so it goes out, and then on the tools you are taking it and increasing it on the tools side, okay, to correct that error. So this one does not affect what? The suspense account, okay. Now let us go to the sixth transaction. For the people on YouTube, remember, on TikTok I am streaming on YouTube. So we are told purchases of inventory of 1.5 million are not been posted to the ledger, but had been correctly recorded in the cash book. What does that mean? It means we have a credit in the cash book, but we don't have a debit in the inventories. What will this lead to? This is going to affect the suspense account. Remember that we have this error of posting to one side only. Okay, so this will affect the suspense account. Description number 5. Okay, before we proceed, what description do you include in the fifth transaction? The fifth transaction was, that is Hammond, yeah. Loose tools bought of this 80,000 and be debited on the purchases of account. You can actually use this the error of principle. It's actually the error of principle. So basically the transaction was recorded in the wrong class of account, okay? Difference between loose tools and purchases. Loose tools is what you buy to use in the business in the long term. Let's say, for example, a hammer. A hammer is a loose tool. You're buying a hammer for a business that is dealing with buying and selling of cups. You're buying this hammer maybe to use it in your, to make your office do something, maybe those tools that you're just using in the business, but you're working on, let's say like you buy, when you have shelves in the business, and then you're dealing with a business of buying and selling laptops. So the buying and those laptops is what we are calling inventory. You're going to see the use of the word inventory. You're also going to see the use of the word stock, and you're going to see the use of the word purchase. So these are the same. Let me know if you are together. And now when you're talking about these are current assets. This is a current asset, but the hammer is a non-current asset. So you need to be keen to see that is an error. Okay, this is basically you've recorded the amount in the wrong class of the account. Okay, this applies to the error of principle. You need to know that this loose tool is a non-current asset, and this PPE is because you're buying it to. Sorry, this hammer is a non-current asset, and the purchases is what you're buying to sell. Okay. To some business, let me explain this better. To some business, when you buy a laptop to use in the business, let's say your accountant, your HR, or your staff are using this laptop, that is a non-current asset. But for a business that is buying the laptop to sell, that is stock. Okay, that is where the error of principle is coming here, because we expect you to understand when you buy something to sell, that is basically that is stock or inventory or purchases. Let me get a comment if you understand what I'm saying. Let me get a comment. Then for the, let me get a comment before I proceed to transaction number 6. The transaction number 6, the purchases of inventory are at shillings 1.4 million had not been posted to the ledger but had been correctly recorded in the cash book. This means that you had not recorded the purchases, but you already credited your cash book. So you're going to remove that effect from the suspense account by recording. You first record that purchase. Remember, the use of purchase is the same as inventory or stock. So you're going to debit purchase account an amount of 4 million. And because that difference is already recorded in the suspense account, you are going to credit suspense account, an amount of 1 million, 1.4 million. Okay. For the people on TikTok, I'm streaming on YouTube. Nice, Jacqueline. Nice. Keep putting in the questions there as we proceed. Okay. Then we go to the seventh transaction, where we are told, I hope the sixth transaction is you've understood. You can just comment there. Seventh transaction, you're being told bad debts amounting to 190 written from the trade receivables account had not been posted to the bad debts written off account. So meaning one entry is missing. So this is going to affect the suspense account, because what we are saying is, when you get a bad debt amounting to 190,000 written off from the trade receivables, when, let's say, let me just explain this technically. When you do even when you do an allowance, what you do when you're writing off, you need to recognize that, let's say you've realized this person is not going to pay this bad debt, so you need to recognize a bad debt expense, which you're going to see, it's going to reduce, it's going to be in the assessment of profit or loss. And then this is an amount of 190. And then what do? You credit your account receivable or your trade receivable to show a decrease, because this person is no longer going to pay. Okay, is no longer going to pay. So you're crediting to reduce. Remember, an account receivable is an asset account, and to reduce it, you credit. An expense, to recognize an expense, what do? You debit. This is what goes to the statement of profit and loss, to reduce as an expense. Okay. So in this case, what you didn't do, this is what you didn't do. You didn't debit the bad debts written off. You only credited account receivable. So the other difference is already recorded in the account, in the suspense account. So how do you correct it? Now you come, this is a seventh transaction. Please be neat. I don't think so. Today I prepared for this question, so my work is not all that neater, but please be neat. Be neat. So debit, you debit the bad debts, the bad debt expense, bad debt expense account, an amount of 190,000, yes. And then you're going to credit the suspense account, an amount of 190,000. Okay. Let me know if we are together. Let me know, just comment in there. For the people on TikTok, remember we are streaming on YouTube. No, Barbie, you don't have to pay. My streams are free. This is not for any membership. You don't have to pay. No problem, Stephen. The recording will be there on YouTube shortly. Please join from YouTube. For the people that are here, feel free to ask the questions as we proceed. Okay. Then now we are at the eighth transaction. Remember, we are recording the journal entries to correct. Okay. We are recording the journal entries to correct. Okay. We are recording the journal entries to correct. So the proprietor of Eskimo Enterprises had withdrawn goods worth 60,000 for personal entries. For personal use. No entries had been made in the books. This is an error of what? This is an error of omission. And an error of omission meaning one side is not recorded in the suspense account already. No. This means there is no recording at all. So what you have to do is record that journal entry, no effect on the suspense account. So in this case, you're going to come, remember, when you take something for personal use, what is that? That is a drawing. And what do we do when you look at dealer? Remember, dealer here, D stands for drawings or dividends. This could be used depending on the setup of the company. Okay, if it's sole proprietorship, is drawings. If it is listed, it's dividends or limited company. Okay, So in this case, what we need to do is for you to increase a drawing, what do? You debit. To reduce, you credit because it is in this set. So in this case, we need to debit drawings account an amount of 60,000, an amount of 60,000. And then what are we going to do? We are going to credit what was taken. We are told that they withdrew goods. If they had taken cash, we could have credited cash. But now what they took is goods. So this is inventory, or rather purchases. In this case question, they are using purchase. Remember, you will find the use of purchase, stock, inventory. It is the same, okay? These are things you buy to sell. These are things you buy to sell. So you're going to credit. Remember, a purchase, or rather an inventory account, is a what? Is an asset account. And to show a reduction, what do? You credit. That is why we are crediting, okay? So up to that point, let me know if we are together on the first section of the question. No problem, feel for real. There are recordings even for yesterday class. I'm not sure if you made it. There are recordings already on YouTube, even for this one. I am going to record it. This question was brought in by Linda Kibet. Let me know if you're flowing in well. Even after this, I'm going to refine this. I'm going to refine this. And always you can bring your questions here, we discuss together. You can bring your questions here, we discuss together. This question was brought by Linda Kibet, and thank you. I'm going to do a clean pre-recording of this. You're going to see it here on YouTube. So the first section of this question was journal entries to correct the above errors, including appropriate narrations. I've not written the narrations, but basically from what I am saying, that should help you to narrate. You don't need much of narrations, but you need to know this is an error of omission. That is why we are not, for example, here including the suspense account. This is also an error of omission. Okay, this one is one entry on one side. Okay, an entry is on one side. Same also, this is also an entry on another side. In the 8th transaction, good question. In the 8th transaction, we are told that the proprietor Eskimo had withdrawn goods worth 60. No entries had been made. If there is no entry that had been made initially, it is because this was an error of omission. Remember the error of omission? What does the error of omission say? Is the transaction is completely omitted from the books of account, and this does not affect the TB total. So the difference is not in the suspense account, okay? The difference is not in the suspense account because there is no debit and there is no credit to affect the suspense account. Suspense account is affected by errors that you debited, you forgot to credit. That means you recorded one side of the account, but you didn't record on the other, or you recorded a credit, but you never recorded a debit. And the other thing is unequal posting. You posted one amount more than the other, okay? Thank you. Yes, that is correct, Reno. Dewey 0902. Explain 7th transaction once again. That is fine. Let me know, Jacqueline, if I've answered your question correctly. Let me know if I've answered your question correct. If I've understood. Jewel 092 7th. So we are saying bad debts amounting to 190 written off from the trade receivables account had not been posted on the bad debts written off account. Okay. Now this one, let me explain to you again. Let me explain. Let me clean up some of the things so that we have more space for our work. Okay. So we are saying when you are writing off, especially for the you are writing off direct method for writing off bad debts, what you need to come is the moment you realize this person is not going to pay, you come and recognize it as a net expense. You come recognize it as a net expense. And how do you do that? You record a bad debt. You record a bad debt expense. Okay, which you're going to expense, you're going to see in your profit, in your P&L. So which amount? In this case, we were told that the bad debt was 190. So you record a 190,000, and then what do? You credit. This is what you're being told here, that they had not been was written off from the trade receivables. So they only reduced the trade receivables. That is, they are saying this person is no longer going to pay, so we are going to reduce the trade receivables account. Remember, the trade receivables account are those people that you're expecting them to pay you. You are expecting them to pay you, okay? You are expecting them to pay you. So we only reduce the trade receivables of once we realize this person is not going to pay you, but then you didn't recognize the expense. You need to recognize the expense, okay? So that is why you have to come and record this debit. You have to come and record a debit bad debt expense, okay? So that is why here we come and debit the bad debt expense and now remove it from the suspense account, because this is something when you record something on one side and forget the other one, remember that difference is already recorded in our suspense account. Remember we said for the suspense account, that is where we temporarily record the difference of our debits and totals. Okay, so every transaction that it's only one side that was recorded, the other side, the difference is already effected in the suspense account. Okay, let me get if I've made myself clear. Jewel 09. Then we have a renal effects, because it didn't affect the balance of the yes, that is correct. Feel for real, you're going to see the videos. You can actually, even on the live session, you can rewatch as we continue. Jacqueline, that is nice to hear. So the first section, let me get a comment also from Linda. Linda, if you are together. So that is the first part of this question, to get the journal entries and just do a very simple narration. You don't have to do much of a narration, just clear, precise narration of it, okay? Then we have the suspense account. The suspense account, duly balanced, showing the initial difference in the books, okay? So here we have to work by the first looking what was where we walk through the recordings that we have made. We need to look at the recordings that we have made, okay, and see what are these things that are affecting the trial balance, okay? So here it has used this. Let me know if we are together before I proceed to the next section. Let me know if we are together. So this is the second part. We were looking at the suspense account, the suspense account, okay? So what we're going to do, we're going to have here, let us do a T representation. Let us use a T representation. Okay. I hope that is clear. It's not overlapping with my picture. Okay, that's fine. That is fine. So we are going to have what we have debited on the debits on this side. We are going to have the debits on this side and the credits on this side, okay? So we are going to start here from the first transaction, where for all we make sure we have all the debits, okay? What we debit, all the transaction, we make sure we record them where, as we looked at each journal entry, okay? So the first transaction, we had to debit this because I think this was talking about you had not posted 1.6. We had an overstatement. A purchase day book of 1.6 had already, on the ledger it was 3.2, okay? So with already the journal entries that we have passed, we need to come and record them here. So you can just write a simple description, okay? So the first one is purchase. It was purchase that was overstated. Just a second. I need some space. Purchase overstated. We have an amount of 1.6 million, right? Then we go to the second transaction. We had debiting the suspense account because of what? This was because of sales account had been understated. We had a sales account that was understated. So we just write a simple description here. Sales account was understated. It was understated an amount of 2.140, but remember we debited, for us to correct, we debited the suspense account 280,000. Okay, so we have to write here 280,000. Okay, then we have the third transaction. Sorry, the fourth transaction. This first, we had the first. Have I recorded how many? Just a second. I have just skipped forward. I hope someone had already noted the error. I had already noted the error. This was the overstatement of 2 million. And then the second part is now where we are doing the discount received. This is where we have a 280,000. Okay, 280. So I had skipped the second one, which is 2.4 million, a debit, and then the second one is the debit to 280. So what we are doing, we are just bringing the transactions affecting the suspense account to one T representation of the account. The fourth transaction, does it have any suspense account? No, this one does not affect the suspense account. The people on your TikTok, remember we are streaming live on YouTube. So for the fourth transaction, this is not affecting the suspense account. Then we go to the fifth transaction as well. This was not affecting the suspense account. Then we go to the sixth. We have a credit. And the sixth was about purchase of inventory. So this inventory was not recorded. Purchase of inventory was not recorded. And this is on the credit side. Okay, this was on the credit side. An amount of, we have 1.4 million. Okay, we have 1.4 million here on the credit side. And then we have the seventh transaction, that is we credited a suspense account as well. So what was it about? Bad debts. Okay, no, this is not bad debts. Yes, it's the bad debt. So bad debt not recorded. The bad debt we had to counteract, which has an amount of 190. Okay, then what is the other one? That is all, because the other one was also not affecting the suspense. So basically, what have I done there? I brought all the amounts on the debits and credit that are affecting the suspense account from what we had passed. First, you have to know, that is why I told you when I was teaching, you have to know how to pass the journal entries. Once you do, then you will know the transactions that are going to work on, to be on the debit and on the credit side. Okay, let me know. Are we together? Kindly comment. Okay, nice, Linda. For the people on TikTok, remember we are streaming on YouTube. Let me know up to that point before I get to the balancing, which I want us to be together. Because when we balance this account is when you are going to know. The question is asking us, we need a duly balanced, showing the initial difference in the books. Remember here, we didn't know what, you see, when you got the difference here, we were told what? That the balance, the difference was entered in the suspense account. So initially here, you just come here, as of right now, we don't know what was debited or what was the difference. Was it a debit or credit? So we need to know what was the initial, so that this account will balance. Okay, that is our test on this question. So you're going to see on the debit side, the total here is going to be, when we sum these, 1.6 plus 2, this is basically on the debits, the corrections are for 280. And on the credit side, our totals are 1,590. For the people on TikTok, I'm streaming on YouTube kindly. I'm streaming on YouTube. I hope this is clear. Don't want to overlap with the photo. If I'm teaching and overlap on my photo or my video, kindly just comment there so that I don't keep on checking. So what is the difference? What is the difference between this and this? What is the difference between that is what was the initial difference. That was the initial difference that we had noted that we passed on the suspense account. Now then we went to investigate and saw that these were what was causing the error. So the difference was 2 million, okay, 0, 0, 0, 0, 8, 21, 18. So here we have 9, 3, we have a 6, correct? Yes, 2,690,000, 2,680 and 90. So initially, for this to be balanced, it means that what had been done is we had a credit balance. We had a balance here. We had a balance, or rather, I don't know if you call it a balance brought down, depending on how we structure this. Because if I write it here at the beginning, this is balance not carried down, brought down, which is supposed to have a 2,690, because now when you sum this and this should give you 42,480, 4,280, okay, 4,280. 4,280. So this is basically going to be, when you have this here, this was the initial balance. When you have this here, you're going to see, let me write it clearly how you're supposed to put it. Total for examination purposes. Our total will be here. Our total will be 4,280,000, and here the total is, remember now when you sum this and this, what will you get? 4,280. So this will be balanced, okay? This will be balanced. Let me know. Remember now when you take this, you less this is going to be 0. That is what you work when you're looking at the suspense account. That's how you work. Thank you so much, Jacqueline. Thank you so much. So initially, this question is testing you backward. It is working backward. So when you get to your trial balance, you get the difference. For example, when you are looking here, when you are given this trial balance, we saw that this had 38,000 and this had 34. So we start by doing what? By having a debit on the suspense account on this side to cater the difference. We are lacking 4,000, so we have a debit on here. Then we go work on our errors. We put the ones on that are causing a debit and the ones that are causing a credit on this side, like that, okay? And then at the end, the debits and the credits should be equal. The debits and the credits should be equal. That is to show it's balanced, okay? But now this question is giving us the errors. So we do the errors, and then the difference is we are looking for this difference that we posted initially. So that is why once we get the debits and we get the credits, we know this was what we passed initially. This is what you passed initially. And this, once you take debit with less credit, it should be equal to 0, because we are trying to remove that difference, because always the debit should be equal to the credit. Okay? Let me know if we are together up to that point, and please be neat. Before every time I start something, when I'm teaching, you can see I use tables where necessary and everything. It's just that this question you have improvised, but try to be neat. Try to be neat. Draw that when if you're sitting for an exam, use the ruler. And because in the exam you're not looking at time factor, you're not looking at being fast and everything. Do your work neat. Write neatly, okay? Write neatly. Let me know the questions on this. And let me know, Linda, you've presented this question tomorrow, you'll be able to handle it. Will you be able to handle it? Remember, when you have a transaction that is not affecting the suspense account, mostly that is omission. You have omission, or you've debited. You have in the same, let's say you've done something on the same asset, the debit is going to be the same. For example, I think we saw one here. In this class, this is an error of principle. This is an error of principle. This is an error of principle. Okay, and this is an error of omission. This is an error of omission. This is an error of omission because in the first place you've not recorded it. Anything that you have not recorded it, this is an error of omission. You cannot dictate it with the statement of sorry, you can't dictate it with the trial balance. Okay. Also, for the fourth transaction where we were being told about accrued salaries are not being omitted. This is an error of omission. What do? You record it, you correct it by recording the initial entry as it was supposed to be recorded. Okay, error of omission. Okay, the others that are affecting the suspense account, basically it is because they are affecting one side. Either they're affecting one side of the equation of the, you either have the debit, you didn't record the credit. Always check for that. Either you recorded the credit, you didn't record the debit, or rather, remember every transaction affects at least 2 accounts. Let me get the question. The people on TikTok, remember we are streaming on YouTube. And the people on YouTube, I hope you have subscribed. Every time I start streaming, you will be notified. And share this with your fellow students, your fellow anybody who is interested in learning this anytime. This is, I usually stream, I usually have a schedule weekly. For tomorrow, we are streaming at 8 p.m. I'm not sure if we're gonna make it 12 p.m., but I'll communicate in the morning hours. For the people on TikTok, remember we are streaming on YouTube. I'm waiting for questions. I'm waiting on questions. For Linda, you're going to see a very clean with narrations video after this. I'm going to re-record this. You're going to find it here on YouTube. Okay. Clean now to follow. But I think I've pretty done a good job there explaining that question. Let me get your comment. Jacqueline, thank you. Jacqueline, thank you. Let me know. I hope everybody who is here, you've subscribed. For the people on TikTok, I hope you have. Don't miss on our classes. Don't miss on our classes. Don't miss on our classes. Thank you, Mama Princess. The person is saying we can't see you. It's because I am live on you. I am on YouTube. I am streaming on YouTube. So for you to see what I'm writing and everything I'm doing, you just have to be on. You need to be on YouTube. Thank you, Mama Princess. Thank you so much. And so on the question of what to expect, thank you, Linda. Thank you. Nice to hear. What to expect for financial accounting paper that is for CPAs. Make sure you know how to prepare the statement of profit or loss, the statement of financial position. This one you're going to apply it on the manufacturing as well as sole proprietorship. That is a very common question that does not miss. Okay, then make sure you prepare on clubs and society. That is a very common question when you're looking at a non-trading company. Okay, this is the clubs that work with the membership. So basically non-trading. We are going tomorrow, actually one of the session, which we are going to be here at 8 p.m. is we are going to look on that. We are going to discuss that. Let me know of any question you have. Maybe I'll check the CPA paper. We're going to discuss questions from that paper. Then we have a very common question also is on the bank reconciliation statement. It's very good to know also the bank reconciliation statement. Then we also have, we also be keen to know other supporting, you know, when we have the financial statements, you need to be able to understand those prepayments, accruals, allowance for expected credit losses, all those you need to be aware. So there can be a question on the allowance for expected credit losses. Also, be keen on that. And then the other thing is on financial analysis, which isn't much. Mostly you're going to find this question comes in as the first part of the question, which is to ask the ratio analysis. You can familiarize yourself on that. We can actually look at tomorrow. We can actually do this tomorrow. Let us work with Renol. Let me do this. Let us get on live tomorrow. I preferably, because 12 p.m. I find myself engaged on another time zone. So what we are going to do, let us have 2 sessions tomorrow. That is at 3 p.m. 3 p.m. 3 p.m. Don't miss. And 8 p.m. 3 p.m. and 8 p.m. At 3 p.m., let us look at the statement of cash flow as well. Let us look at the statement of cash flow and allowance for expected credit losses. Then at 8 p.m., we look at clubs and society, that is the non-trading. And also we look at partners account. So the financial statement for partners, and also we look at for non-trading. And then at 3 p.m., we look at statement of cash flows. That is 3 p.m. East African time. I know, feel for real, it is the same time. In Uganda, it's still same time, 8 p.m. Yeah. Let me know, is there anybody joining from Southern Africa, South Africa, Zambia? Let me know. Nice to see Linda. Linda has mentioned you're going to see a pre-recorded video of this on our on our YouTube videos anytime, preferably by tomorrow. For all the lives I do, you're going to find them here. They are pre-recorded. I post them back here. Let me know. Okay. Rene will have answered your question. Keep asking the questions. For the people on YouTube, remember we stream on YouTube. We are streaming on YouTube. For you not to miss, go subscribe. And for the people on YouTube, kindly be sharing our account to people who might benefit from it. Remember, all of our records are free. Everything, there's no membership here. Anybody can watch anytime. And for the people who have the resources, there is courses for you. But if you don't have the resource to purchase, you're going to find the recordings on YouTube, okay? You're going to find the recordings on YouTube. For the people on TikTok, I hope all of you are able to subscribe. Let me know. And keep liking the live. Thank you so much, Mama Princess. Thank you so much, Mama Princess. Thank you so much. Keep liking the live. I'm waiting for the people on YouTube on this. I'm going to release another schedule tomorrow for Monday management. What other units are you looking at, Kelvin? When it comes to here, you're going to learn more on finance aspect. I don't teach much of quantitative and law. This is under financial management. That is intermediate level now. Management accounting, audit, and tax, okay? And tax. Let me know for the people who are joining on TikTok. Remember, we are streaming on YouTube. And for the people, advanced taxation, well noted. That is advanced level, right? For the people on YouTube, make sure you're subscribed. For anybody who has a question you want us to look at tomorrow, just chat in there. Also chat it in there. Just chat it in there. If there is a specific question you want us to look at tomorrow. Night, I hope you've already subscribed on YouTube. You've already subscribed on YouTube. Okay. Let me get the questions. I don't want to close without tackling your questions on YouTube. We are about to end the session in a few minutes. For the people who are joining now, remember there's going to be, you can preview the video here on the live. I'm also going to record this session again and post it on YouTube, okay? I'm going to pre-record this and post it on YouTube. I'm going to pre-record and post it on YouTube. So for most of the long form videos, you're going to find them on YouTube. So for the people on TikTok, make sure you come and subscribe here. When I start streaming, you'll be notified. There's a link on my TikTok story. There is a link on my TikTok story. There is a link on my TikTok story. Yes, there is a link on my TikTok story. And prior to us looking at the statement of cash flow, let me send you a link. I think Reno asked about this. Reno is that link on the statement of cash flows. You can familiarize yourself. Familiarize yourself at least what we call the statement of cash flows. Remember here, we just want to know, when you look at the cash, in the cash balance as at 31st December 2024, for example, let me give you an idea of the statement of cash flow before we look at it tomorrow. In our financial position, that is the balance sheet. Always remember when you're looking at practical real life, we usually have the year, we usually have the prior year records, and what under assets where we have the current assets. We have the current asset is where we have our cash and cash equivalent, that is basically cash in bank and cash, physical cash, okay? So let us work with cash in bank, let's say in a scenario, because most people are usually dealing with cash these days now that we have mobile money and we can make transaction with using the mobile apps, okay, bank apps. So this is 2024 and 2025. So the balance asset end of 31st December 2025, we see it is 2 million, 2 million. And the balance asset 2025 is 3 million. What the statement of cash flow wants to show, what has been happening, that because this is the opening balance in year 2025 as well, okay? What has been happening? What has been happening? This is 3 million. Yes. What has been happening during the period that has brought that balance from 2 million to 3 million? So this is where we divide our activities, the activities that is the operating. We have operating activities. We have operating activities. We have operating activities. We have investing. We have investing activities. And we have financing activities. Financing activities, okay? So basically, we are going to list what is happening under operating. Operating, these are the main operations of the business, the buying and selling. Remember, when you're buying from your supplier, you're using cash. So you need to show the cash that is going to your supplier. Remember, you're being paid as well by your clients. So there is cash that you're receiving in. Remember, you're paying for expenses, you're paying for utilities, you're paying your employees, all those things, you're going to find them here, okay? Then under investing activities is where now we are listing what the PPEs that we have bought. Have we bought in a laptop? Have we bought in a money what land? Have we bought in a building? Have we bought in a laptop? So, and also disposal of these PPEs. We've deposed, we sold a laptop, we sold a furniture, okay? When it comes, sometimes a business disposes. So we need to see that we bought, so the money left, that is cash outflow, and we disposed cash in, okay? Then we have the financing activities. The financing activities, basically, these are capital. We're talking about money coming in as capital, dividends going out, the cost of maybe getting loan you receive, and also there is interest of paying. Okay, so this is all movement of cash that is going. Once we sum these, the difference should be this 1 million here. This 1 million here. Remember the difference here from 2 million to 3 million. We are going to show it and break it down. Where is it coming from? So basically, the statement of cash flow is focused on the cash account. It is focused on the cash account. It is going to show you this 1 million has been moving in and out under where? Under operating activities. This is what has been happening under investing and under financing activities. Okay. And let me know if you are clear up to that point. For the people on TikTok, remember we stream on YouTube. Remember we stream on YouTube. We are streaming on YouTube. We are streaming on YouTube. To get to us, you have to subscribe. Go to the link on my TikTok story. Reno, let me know if I've given you a good idea for the statement of cash flow before we look at it tomorrow. So that is it, operating, investing, and financing. And there are two methods to go about this. One is called the direct method. The direct method, where you look at the differences per section, and then we look at the indirect method that is used mostly by the banks or basically the financial institution and very large companies. So they work backward from the statement of P&L. They work backwards. This is the indirect method. So we are going to look at both tomorrow. That is the direct and the indirect method. Yes, it goes. It goes to financing, but IFRS, actually the IFRS 18 that is going to be, that is, I think it's starting the mandatory adoption in January. It allows interest income to come under operating as well. Whether the bunch, any can go, you are allowed to put it under operating or financing. It doesn't, you're not going to get any penalty for having it either. You can have it under operating or financing activities, okay? All interest, you can have it under operating or financing, okay? So for the people on TikTok, for you not to miss our live sessions, go check the TikTok story. You're going to see the link to our YouTube account. Go subscribe. Every time I start streaming, you're going to be notified. And for the people on YouTube, share this account with your fellow students. Anybody will benefit from this. Reynold, I hope I've answered your question. I hope I've answered your question. You can check this video as well that I have shared. That is for cash flows. That is for cash flows. For the people on YouTube and the people who are joining the stream on YouTube, kindly make sure you subscribe and you watch our pre-recorded videos as well for the questions that you might have. For the people on TikTok, remember, kindly go subscribe on the YouTube so that you don't miss our stream sessions. Oh, nice to hear. Even for now, you can. Even now, you can. Reno, you can. You still can. You still can because you're not supposed to be. There's no there is no written place that it's wrong to do it because also IS was allowing it. You can. You can. Actually, it's something that I've been wondering. How come there isn't much of a rule there, but it is allowed. I think I can send you something on FRS here to use, but basically you can. Okay, let me know any other questions. For the people on YouTube, make sure you subscribe on the YouTube account. Okay, make sure you subscribe. Have the notification button. Also, let me know the people who will be available tomorrow 3 p.m. because of scheduling. I think it's hard to get people out during the day. Let me know. For the people on TikTok, go subscribe on the YouTube account. Let us take this to 350 today. We are at 344 subs. Let us take it to 350 subs. Let us take this to 350. Okay, that's fine, Reno. You're much welcome. Let us take this up to 350. 350, we are at 350, 344. Okay, then. Any other questions to the rest of the viewers? Let me know if you have any other question and you have any other topics that you want us to look at. Nice, good. Welcome. Linda, 3 p.m. tomorrow. You can share it with your fellow students or anyone who is going to benefit from this as well. For the people on TikTok, make sure you subscribe so that you don't miss out on this session. Go subscribe. There's a link on my TikTok story. Yes, not disposal gain. Okay. Yes. We put it, it's basically what I'm saying is when you dispose, you're going that amount, that cash that you're receiving once you dispose, that is what, yes, I'm saying should be now under investing. Okay. Gain, what you have brought in after disposing this, it is under investing. So actually, I think I understand where I recommend having it under investing, even if we would allow it to have it under operating. For me, I prefer to have the things under investing. On PPE, to have everything under investing, and then for financing, because now if I have the loan there, I prefer having the interest income there as well. But I know there are those two things that you're also allowed to have them under operating. You're not going to get a penalty for having them under operating, or rather investing or financing. Okay, but for your arrangement of work, I prefer, if you bought in PPE, your money gone out, and then from it you've received, then my preference is having them under investing. But you're going to see also there's been a clear conference. Actually, I've seen people talk about this a lot for IFRS, and they allow you for both operating. You can have it those disposal on investing and financing as well. Okay. So with that, I think we'll end it there for today. I hope you had a good session. I hope you enjoyed the session. For the videos that you might have missed, you're going to find them here on YouTube. If you missed our before lives, you're going to find them here on YouTube. I think what I've not yet dropped on YouTube is today's. I'm going to share it, and also the bank reconciliation statement. You're going to find it here by tomorrow. So prepare. There is no room for failure on this. Make sure this is a straightforward pass. There's no room for failure here. We've done a lot on here. Okay, we've done a lot here. So I really have much trust in this, much of it. If you take your time, go through any questions you have. I think for most videos that you need to pass that, you're going to find them here on YouTube. Just watch them and get ready for the exam. Remember, another free hack, as much as you can, be neat in your workings. Be neat helps you also to have a clear mind when you're thinking. Okay, be neat when you're working. Everywhere, always. As an accountant, you really need to be neat. I think one of the qualifications of being an accountant is to be neat in your workings, because then the reports that you come up with, many people are going to rely on them. So you shouldn't have any room for misunderstanding. Okay? Yes, thank you, Jacqueline, as well. Welcome. And for all of you, have a good day ahead. Is it a good day or basically a good night? Have a good night. See you tomorrow, 3 p.m. and 8 p.m. So I'm just going to take a break. We're going to run the session from 3 p.m. to maybe 5 p.m. and then I'll take a break and see you later at 8 p.m. Okay? Let's ask, in preparation of income statement, are you supposed to use columns? Yes. By columns, you mean the arrangement, yes, in columns. Yes, you should use. When Reno, you search, for example, here, the financial statement of any prominent bank you use, look at the structure of that income statement. That is basically what you should use. And it is prepared in columns. You have columns. Using computer when doing exams, I think there's a level that you're allowed to use the computer. In real life, definitely we are using the computers anytime. But now when you're looking at the exams, I believe we are looking at basically doing it on paper. But then when you get to the advanced level, there's a usage of Excel, which now you have to practice on that. Yes. Or Amon, these days people are using computers for financial accounting, foundation level. For the people on TikTok, remember we are streaming on YouTube. The YouTube link is on the TikTok story. Let me just pin it here. They have shared with the link. For the people who are joined now, asking for the YouTube link, there is a YouTube link. To Rubani, there is the YouTube link. There is a YouTube link. Go subscribe. I've pinned the comment. I've pinned the comment. I believe that you mean at the advanced level, right? I've pinned the comment. For the people who are joining on TikTok, I've pinned the comment. No, we are ending the session, but you'll find the video already pre-recorded for your view. You'll find the video pre-recorded for your view. You're going to find the video pre-recorded for your view. Thank you, Babi. Thank you. For the people who are joining, there is the link. Go subscribe. Go subscribe. Go subscribe. Go subscribe. The link, once you get to the YouTube, go subscribe. We just finished the session. Today we were looking at suspense and correction of errors. Rubani, let me know once you are able to subscribe. Let me know once you're able to subscribe. Rubansi. For the people who are asking for the link, I've shared it. It is pinned there. I've pinned it there. Let me know once you're able. So go subscribe. Every time I start streaming, you'll be notified. You'll be able to join the stream. Let me know. So I want to end it there today. Thank you so much for joining. See you tomorrow. Reno, have a good day. Jacqueline, Linda, Kelvin, Jacqueline, Feel for Real, Julie, Julie09, Naomi, Stephen, Hamon, yeah, yeah. So Meshuko, see you tomorrow at 8 p.m. Remember, share back, share the link to these videos, share the link to the YouTube account, share it with your friends, invite them also to benefit from this. And everything here you find is free, as I mentioned. There's no membership on this account. Anybody can watch the videos anytime. If you want a structured learning, there are courses as well. There's a link on the web, the bio. So Romancy tomorrow we are looking at we will be live at 3 p.m. and also 8 p.m. East African time. Let me know if you are able to subscribe. Once you subscribe, you're going to be notified when we go live. You're going to go live at 3 p.m. and at 8 p.m. 3 p.m., 8 p.m. Okay, 8 p.m. and 3 p.m. Okay, for today now, I'll end the stream there, but you can continue watching it. You can just pull it back and continue watching the stream up to the point if you've joined late. For the people on TikTok, make sure you subscribe and see you tomorrow. Have a good night.